Welcome back, wolves. Today we are vlogging out of the Versace hotel in Dubai, one of the most luxurious hotels. Super nice here. Just taking the walk indoor because it's like 50 degrees here in Dubai currently. However, you will have a Wolf of Dubai vlog today about 3 stocks we are buying this month. Here we go. Hello, and it was way too loud to vlog inside, so I'm here outside on the terrace of the hotel, and currently are having really heat, but here it's fine because it's in the shadow. Beautiful scenery here. However, we're talking about today 3 stocks that we will buy this August, this month. Yes, it is another month, and yes, we're buying 3 new stocks this month. So actually, if you are new to this channel, make sure you subscribe, and if you are returning or new as well, make sure to smash the thumbs up button because this is very important. And let's dive into it. So first stock, and you already know, is for me to buy Tesla. More Tesla if we dive in the numbers in a second, but they just had a dip, and I think the dip was or is a very important opportunity. I don't think there will be a lot of opportunities of this dip and this price of the stock in the current future, so that's why I think it's a good opportunity to buy more of Tesla, more of the revolutionary car manufacturing company. And they just announced a couple of new products and so on, but this is a vlog for itself. So today we're just going into the stock and why it's so interesting to buy. So let's have a look. The revenue last year was $21.46 billion, and I just talked about the revenue growth of 80% last year, but this quarter they announced that quarter over quarter, and this is the latest revenue growth number which I wanted to share with you, is 60%. And I believe that there's not much companies out there that can say they have 60% revenue growth on such a big amount of revenue already. So you can see where this is heading. I believe that Tesla can achieve maybe something about near $30 billion revenue this year, which will be very strong, and this will be exponentially growing through the Gigafactory as well as the further manufacturing enhancement of Model 3 in US as well. The value of the company is currently at 42 billion. I think that's quite cheap for this company. If you see, they just make the PS ratio is just 1.64 for such a company with such a growth potential. I think it's amazing. It's undervalued, much undervalued for this stock. I think the story is there, the product. People love the product. I just spoke with someone recently, and he drove the very first time the Model 3, and he said like he's buying one, so it's addictive product. They don't need any marketing, and this is huge if the company can say something like that. Though they don't make any profit yet, so they don't have a PE ratio officially, and I believe the unique stock strengths and why I'm buying it finally as well is of course the growth of the company, as well as the overall potential of the vehicle market. And let's move to my next favorite. Next company that we are buying this month is Apple. Apple just released their revenues. You will see a video about that in my channel, and they just growing and growing and growing, and they are just in the transition from a hardware company, from a iPhone company, to a service and wearables company. You have seen that the service and revenue of the service is growing so much that it will be one time the most part of the revenue, and the iPhone revenue accounted less than 50% already. This was not the case since 20 12, and this is a very positive sign that the company is not so dependent on the iPhone sales anymore, less and less with each quarter, each year. This is very positive, and let's go into the numbers. So last year they made $265.6 billion revenue. This is mind-blowing, so much money. Their balance sheet, and this is one of the strong point of Apple, is super strong. A lot of cash, one of the biggest cash positions ever. They grow revenue last year, 2018 compared to 2017, of 16%. This number will be lower definitely, but they just released the guidance and they want to make next quarter already $61 to $64 billion revenue versus 61 expected. So revenue growth is also there, and the value of the company is $922 billion, just because Trump just announced the tariffs on China. The stock market just got a little hit, so that's why on Friday the stock lost about 2%, and this hit the company, and they were already again over the $1 trillion cap after the earnings, and they reduced to $922 billion. So one of the biggest companies in the world. PS ratio is also very healthy with 3.76 only, and the PE ratio is 17, and I think these numbers are really good for such a big company, for such a technology industry mega company with such numbers, such great value for the shareholder, not only because they are buying back shares, but also that they are actually putting dividends out to the clients, and they have one of the biggest shares buyback program ever in history. So very good for shareholders, as the shares that actually each shareholders has will be more percentage wise of the company, because they buying shares and there's less and less shares on the market. So if you have like 10 shares of 100 shares outstanding, it's 10%, but if you have 10 shares outstanding of, let's say, 80 shares in total, then you have already 20%. So this is very strong. They pay a dividend of around, currently to the current price, 1.5%, which is okay. And I believe that this is definitely a buy if you're looking for something safer, for something big, for something value, you know, strong brand. Warren Buffett, you know, he makes a very intelligent investment decision, and he is a big shareholder of Apple. So, you know, invest with him and with me in Apple. That's a very good stock in my opinion, as more of a not growth company anymore, but value and stability and changing, innovating, and so on. So I think the biggest strength of this company is really shareholders value. Let's jump to the last one, and this is something very interesting. I was looking forward to it because I made a couple of videos about this company, so let's have a look. Last but not least company here in our presentation today is Disney. Disney is the company behind all your Marvels movie, all your new upcoming Disney movies like Beauty and the Beast, Lion Kings, and so on and so forth. So they creating most watched content ever seen. Is a company that is so long around, so much value, and so on. So let's have a look at the numbers. So Disney last year made just below $60 billion revenue, $59.43 billion. They grow from the 2017-2018 over the year were 7.8%. That's not that much, but you know, such a big company in this industry is very you know, on the side of creating value for the shareholders, and not growing so much anymore. But they have stability, they have new upcoming things like the streaming service and all these things where they can put a lot of content for the clients, and also creating the channels where they can look this content and watch this content. I think this is missing because they are depending on the cinemas, you know, and the DVDs and so on. So, but with the streaming channel, they will definitely have more and more reachable in all the households. They bought a couple of cable and news channels in US, so they have a lot of variety, not only this kids and let's say entertainment side, so also information side and series and so on. So this is very important if you grow your streaming service, that you have a variety of content. The value of the company is currently $255 billion, guys, so very quarter of a trillion. I think there's still room to double the value as one of so much market share of this entertainment industry, as well as you know, paying dividends of 1.25% and PE ratio of just 19.6 and PS ratio under 4 with 3.58. I think it's great numbers. I think the company is valued, should be valued much more. I think the PE ratio could raise up to 30, PS ratio until 5 or 6, where I see you know, slowly, you know, saturation of the value. And their biggest strength is definitely content. You know, I'm very curious about this upcoming week, because they are just announcing the quarters, the earnings, and they will include all the Marvel success inside this earnings, as well as you know, all the new movies like Lion Kings and so on. So very interesting how this will play off. And so this is the last stock I wanted to present to you. So you have 3 really valued and 1 very valued and growth stock here. Very good selection in my opinion. Let's have a look how this developed over the years. You know, I'm a long-term investor. I'm looking for undervalued companies, and I think these are 3 undervalued companies even when they are already so big. And I think that in general it's very hard to grow, but these 2 companies, Disney and Apple, have very good products to grow in the future, to innovate, and they have the DNA to innovate. There's so much around. So let me know what you think in the comments, and make sure you thumb up this video to have more of these vlogs. I'm looking forward to see you already tomorrow for my next vlog, and don't forget, the grass is greener on the other side.